It's time now for a look at the market action today. The closing bell rang just a little while ago at the Korea Exchange. On the line is Daniel Yoo, global strategist at Kiwoom Securities. Thanks for joining us today.
Thank you for having me.
So give us a rundown of the action today in Korea and other markets overnight.
Sure. If you look at Korean market, it showed a slight rise today. Kospi was up 0.13% and Kosdaq was up 0.65%. Over the night, there's been concern about the U.S.-China trade talk being heading for some headwinds, some concerns. But despite that, the market seems to be showing upbeat trend thanks to the foreign net buying continuing in Korean market. If you look at over the last 1 week or so, foreign investors have bought net of 1 trillion won worth of Korean equities. And also in the futures market, foreign investors also bought close to 2 trillion won worth of futures. So they're expecting the market to rise further in the future. The reason for that is because of the China numbers coming through showing that maybe Chinese economy is bottoming out. And that results into global economy entering a bottoming phase, despite all the concerns right now that economic recession possibilities. If you look at the U.S. market, it showed a mixed trend as well. Over the night, Dow was down 0.32% on the concern of the U.S.-China dispute in regards to the Boeing company's earnings in the future. While the S&P was up 0.1%, Nasdaq was up 0.19%, while the small cap was down 0.13%. The news flow seems to be quite lack last night. Overall, the European market is watching out for what's happening to the Brexit issues. There will be a meeting between the Senate and minister on the 20th, and whether the Brexit issues can be resolved. Because of that, European market seems to show a mix of signals. DAX, Germany market was down 0.39%, while UK FTSE was slightly up, and Italian market was slightly up.
Okay, got it. You mentioned earnings at Boeing. It is the start of earnings season for the first quarter in the U.S., looking like profits might be down for the first time in 3 years. What do you see happening there, and what sectors should we be watching in particular?
Sure. Clearly, the consensus estimation is showing a clear downward trend right now. Main reason for that is obviously because the economic slowdown is happening. We've seen that since the first half of last year, economic growth rate of the global scale has been diminishing somewhat, and that affects negatively on earnings. However, though, the level of decline of the earnings seems to be fairly limited. If you look at the Dow Jones earnings revision since the beginning of the year, that's been about 2% level of decline. As for the S&P 500, it's about 2.7% decline, and Nasdaq is about 3%. So despite that earnings are revising downward, the level of revision down is not that significant. And if you look at the ROE numbers for the U.S. market, S&P is still showing 18% plus return of ROEs. Nasdaq is showing over 21.5%. And also Dow is showing a 23.8% ROEs. These ROE numbers are one of the strongest numbers that we've seen in the last several years or ever in a record level. So all that's been said, yes, there's been concern about the earnings decline. Nevertheless, the U.S. companies' earnings are very strong still. What we need to watch out in terms of sectors, we continue to need to look at what's happening to the major IT sector, given that the ROE is coming in more strongly from that sector, as well as bio sector showing over 25% in ROEs in general. Also, what's happening to the banking sector is important because you have seen a flattening yield curve that affects negatively on financials. But if they can come out with earnings that is showing a reasonable rise, that will be definitely positive. Also, with the oil price rising rapidly in recent trend, whether or not energy sector and alternative energy sector is showing a reasonable earnings numbers. Those are the main factors we need to look at.
Yeah, and as you say, it has been an amazing year so far on the stock market, an amazing turnaround, but the theme is also a potential slowdown. The WTO revising its outlook, far less growth in trade this year than expected. You have the IMF warning that the economy globally is running out of steam. What does this mean for the world economy and the Korean economy as well?
Sure. Let's look at what they really have said. The WTO have said that 2019 merchandise trade volume is a staggering 1.1%, latest downward revisions to the global growth estimations. And clearly, they're talking about world trade will continue to face a strong headwinds because of the U.S.-China trade talk at the current point in time. And they're urgently encouraging that the tension needs to be removed between these two countries. Also, the IMF have said that U.S. growth rate forecast is revised down significantly for 2019. Previously, they were expecting 2.5% growth at the beginning of the year. Now they have revised down to 2.3% growth rate. Overall, global economy also slowing down due to what's happening to U.S. as well as China, mainly due to the U.S.-China trade dispute. However, though, we are seeing continuation of the aggressive monetary policy changes. You're talking about a Fed saying that no interest rate hike. Now they're talking about possibility of interest rate cut within this year, not necessarily from the Fed, but generally from a lot of the economists globally and also in U.S. And you are seeing Chinese Bank of China talking about possibility of reserve requirement cuts, as well as possibility of rate cuts going forward. Also, ECB and BOJ are all talking about monetary easing, and that means that despite the concern of the economic slowdown, monetary policy will be very unfavorable for the global market. So, yes, we need to see how that easing of the monetary policy will affect the economic growth. If you see the economic growth really bottoming out at the first half of this year and seeing recovery, then the equity market should do continuously well going into the second half.
All right, got it. Well, we'll have to leave it there today, Mr. Yoo. Thanks again for your insights this afternoon, as always.
Thank you very much.